The Strait of Hormuz is one of the most important stretches of water on planet Earth. And right now, it is sitting at the center of a conflict that could reshape the global economy. Today, we are asking one question. When the world gets scary, where does money run? And is Bitcoin finally ready to answer that call? Let's start with some geography, because this matters more than most people realize. The Strait of Hormuz is a narrow waterway between Iran and Oman. It connects the Persian Gulf to the open ocean. And here is the number that should make your jaw drop. Roughly 20% of the entire world's oil supply passes through that strait every single day. 1/5 of all the oil on Earth moves through a stretch of water that is only 21 miles wide at its narrowest point. Think about that for a second. Saudi Arabia, Iraq, Kuwait, the UAE, Qatar, all of their oil exports flow through that choke point. If that strait gets blocked, disrupted, or becomes a war zone, the entire global oil supply gets a shock it has never experienced in modern history. Iran has threatened to close the Strait of Hormuz multiple times over the past 2 decades. Every time they do, oil markets go crazy. Now, with active conflict escalating, those threats are not hypothetical anymore. And when oil gets disrupted, everything gets disrupted. Fuel prices, shipping costs, manufacturing, food prices. The entire global economy runs on oil, and it all flows through that one narrow strait. Now, here is where it gets really interesting, and most people do not connect these dots. Since 1974, the world has operated on something called the petrodollar system. The deal was simple. Saudi Arabia and the major oil-producing nations agreed to price all their oil in US dollars. In exchange, the United States provided military protection and security guarantees across the Gulf region. This arrangement gave the dollar something incredibly powerful. Every country on Earth that needed oil had to first acquire US dollars to buy it. That created a permanent global demand for dollars. It is a big reason why the dollar became and stayed the world's reserve currency. But that system is cracking. Over the past few years, Saudi Arabia started accepting Chinese yuan for oil payments. Russia started trading oil in rubles and other currencies after sanctions. Brazil and China started settling trades directly without dollars. The BRICS nations have been openly discussing alternatives to dollar-based trade. The petrodollar is not dead, but it is wounded. And every major conflict in the Middle East accelerates the conversation about what comes after it. Because if oil stops being priced in dollars, the artificial global demand for dollars collapses. And when that demand collapses, the dollar loses a massive pillar of its strength. Throughout history, whenever there is uncertainty, war, inflation, or currency instability, people move their money somewhere they believe will hold value. For thousands of years, that was gold. Physical, tangible, nobody can print more of it. When empires fell, when currencies collapsed, when wars destroyed economies, gold survived. But gold has limitations in 2026. You cannot send gold across a border instantly. You cannot divide it easily. You cannot hold it on your phone. And governments can confiscate it. The US actually made it illegal for citizens to own gold from 1933 to 1974. Bitcoin was literally designed for this moment. Fixed supply of 21 million coins, ever. No government controls it. No central bank can inflate it. You can send it anywhere in the world in minutes. You can hold it in your head with a 12-word phrase that no government can seize. When the Iranian conflict started escalating, something interesting happened. Bitcoin held its value better than many expected, while traditional markets wobbled. That is not a coincidence. That is the market starting to price in Bitcoin's safe haven properties. Now let's be real, because this channel does not do hype. Bitcoin is still volatile, far more volatile than gold. It can drop 15% in a day. For someone trying to park money safely during a crisis, that volatility is genuinely uncomfortable. And Bitcoin still has correlation with risk assets. When markets panic hard enough, people sell everything, including Bitcoin, to raise cash. We have seen this happen. But here is the nuance. Short-term Bitcoin can be volatile during crises. Long-term, every major geopolitical event of the past decade has pushed more institutions, more governments, and more ordinary people toward Bitcoin as an alternative store of value. The trend is undeniable, even if the day-to-day price is messy. Gold took decades to be trusted as a safe haven. Bitcoin is a teenager by comparison. The question is not whether Bitcoin becomes a safe haven. The question is when. Here is the big picture that most financial media is not talking about directly. If the petrodollar system continues to weaken, the dollar loses its artificial global demand. That means more inflation exported back into the United States. That means the purchasing power of dollars sitting in your savings account quietly erodes faster than most people realize. People around the world are already responding to this. Central banks are buying gold at the fastest pace in 50 years. Countries are diversifying away from dollar reserves, and a growing number of sovereign wealth funds are quietly allocating to Bitcoin. The Iran conflict is not just a regional war, it is a stress test for the entire post-World War II financial order. And assets that exist outside that order, gold and Bitcoin specifically, are the places people look when confidence in that order starts to shake. The world is changing fast, and the financial system is changing with it. Understanding what is happening in the Strait of Hormuz and why it connects to your money is not optional anymore. It is essential. If this video helped you connect those dots, subscribe to Crypto Clarity. We break down the stories that actually matter in crypto and global finance every single week. No noise, just clarity. See you in the next one.